So should you max out your IRA early in 2022? Here's what the advisors say. The key points. Eager savers may consider maxing out 2022 individual retirement account contributions early rather than waiting until the tax filing deadline in 2023. But there are mixed expert opinions about lump sum investing versus spreading out deposits at set intervals, known as dollar cost averaging. Hey, what's going on, my friends? It's your man Adam Ace Spencer here with another video, and today we are diving into this topic, this question about what makes the most sense for contributing towards your individual retirement account, your IRA. We recently made a video talking about dollar cost averaging, so you guys should know about that if you have seen that video. If not, I will post a link to it up in the top right hand corner. And hopefully down in the description area if I remember. Now, if you're eager to save more, you may consider maxing out 2022 individual retirement account contributions early rather than waiting until the tax filing deadline in 2023. But there are mixed opinions about lump sum investing versus spreading out deposits at set intervals, known as dollar cost averaging. The IRA contribution limits for 2022 are the lesser of $6,000 or your taxable compensation for the year, with an extra $1,000 for investors age 50 and older. I say, go ahead and put it in, said Sally Mullins Thompson, a Washington-based certified financial planner and certified public accountant at the firm with her name. Otherwise, they might spend it on something else. Moreover, investing the money now offers more time for compounded returns, Mullins Thompson said, and there's faster tax-free growth if you're contributing to a Roth IRA. You want to do that as soon as possible, she said. Now, lump sum investing may beat dollar cost averaging as the stock market trends higher, according to a study from Northwestern Mutual Wealth Management. The study looked at rolling 10-year returns of $1 million invested immediately starting in 1950, which outperformed funds allocated over time. However, some experts prefer dollar cost averaging to lessen downside risk, particularly for disciplined savers. By investing on a monthly basis, you are buying when the markets are high or low, so you're getting a better average price over the year. You want to be able to take lots of bites at the apple, said Jay Spector, a CFP and partner at Barton Spector Wealth Strategies in Scottsdale, Arizona, explaining how many investors opt for IRA deposits throughout the year. By investing on a monthly basis, you are buying when the markets are high or low, so you're getting a better average price over the year. For example, if you had contributed $6,000 or $7,000 in February 2020, the value may have dropped 20% or 30% in March 2020 at the start of the pandemic, he said. However, if you'd split the money between February, March, and April 2020, you may have had a better overall average experience getting into the market, Spector explained. Of course, investing now or incrementally may both pay off when it comes to planning for long-term goals. We're talking about people saving money for their future, he said. So really, there is no wrong answer. Now, my friends, pretty much what he said is, I wouldn't say there's no wrong answer. Yes, of course, we are investing, and it's all about basically saving towards your future. But ultimately, I mean, if no one can predict, no one could foresee exactly what's to come with the market. But if things continue to go down, if you know, like there's no shortage that's kind of ending for another 6 months or later, things like that, well, you might be able to have a better calculated opinion when it comes to what might happen with the market, which might give you a better I don't know if I'd say advantage to basically determine if you want to go forward with doing the kind of lump sum approach opposed to spreading it out in dollar cost averaging. So I wanted to share this with you guys because it is the start to a new year. This is the time where, you know, if the market was to kind of bounce from here and go just kind of pick up, well, it would make the most sense to want to take the lump sum investing approach. However, if the market does continue to go down, well, we don't know exactly when, the end, when, like if it, even right now, it could stop going down and continue to go up, or it might continue to go down. And for that reason, taking the dollar cost averaging strategy might make the most sense for the time being. And once you can start to see, okay, we're getting some upward momentum, things look like we're really on a rebound, well, then you might want to consider just doing a larger lump sum contribution, in which maybe you leave a small portion, a small little space for the end of the year, depending on where things are at with how much you contributed towards the beginning of the year. But a few different ideas, a few different thoughts. Really wanted to just share this with you as the year kind of picks up, and we're starting to make these contributions to our IRAs. And as I mentioned, I do love the Roth IRA specifically. So hey, this is the time to start to do some small, even if you are balling on a budget, pay once a week, once a month, however frequently you can. Any time is better than no time. So that said, I'm going to wrap it up there, but would love to hear what you guys think. What do you do? What's your strategy? Do you do kind of the lump sum approach, or have you taken the dollar cost averaging approach? I'll share my thought. I mean, I think I've already said specifically what I do. Oh, and if I didn't, maybe I will in another video, or down in the description area if any of you guys are curious, or the comment section, I should say, if any of you guys are curious. But on that note, yeah, I'm going to wrap it up there. I do have a link down below where you can start and fund and open an account with M1 Finance, which is where I have my Roth IRA, and I would recommend others as well. But of course, pretty much I think every broker offers a Roth IRA these days. So if you are working, if you have your money elsewhere, then consider looking into opening up a Roth IRA with them. But like I said, I have a link down below where you can use my referral link to M1 Finance, open up your account, fund it, and I believe you can get like $30 or $20 for free. Hey, that's free cash right there. That's all I'm saying. But all right, I'm going to wrap it up there. Like I said, leave a comment down below with your thoughts about the strategy that you are taking with your IRA. Definitely curious what other people are doing, especially with the current market. And yeah, don't forget to like this video, subscribe to the channel, hit that notification bell so you guys can stay up to date on all of my latest and upcoming videos. But all right, my friends, you already know I gotta keep it moving, but I'll see you in the next video. Peace.